All right, in today's episode, we are talking about uranium investing in the future of nuclear fuel. And we're speaking to Rick Rule. Rick Rule is actually who originally turned me on to uranium. And I was staring at these very cheap uranium stocks after the coronavirus sell off that happened. And it became such a compelling situation. And through the end of the year, we had an incredible rise in many of these stocks going up multi hundreds of percent. And the crystal ball man himself, Rick, told me a while ago, he said, I'm expecting a correction here soon, and we've surely gotten that. And so we're going to be discussing that market here. And so make sure that you hit the like button on this side right over there or this side to send this video out into the YouTube universe so more people see this video. Comment down below, Rick Rule rules. Comment down below, Rick Rule rules. And thanks to our channel sponsor, which is Vizsla Silver. And it's good to see you, Rick.
It's a pleasure to be with you, Jake. Thanks for having me back.
All right. So, is it exciting seeing what's happening in uranium, given that, you said it was the most lucrative event of your career last time? Let me know your thoughts.
Both exciting and fascinating. It's nice to be interested in something that you think will benefit you as a consequence of your interest. As you suggest, the uranium stocks went from dirt cheap to overpriced. And now, as a consequence of the Cameco restart, they're becoming cheap again. It's unusual, but I traded this fairly well, Jake. I don't think of myself as a trader. But in this particular case, I traded it fairly well. I was fairly aggressive when the stocks were cheap. When they got way ahead of themselves, I sold some, probably not enough in retrospect, but I'm getting ready to buy back. And that's a very interesting circumstance because I still don't believe that the uranium juniors are cheap. And the big stocks, the ones I really like, the Kazatomproms and the China General Nuclears and the Camecos, have had a nice run too. But I also believe that the sector is getting tighter and tighter and tighter. And the truth is that I'm in a position now where my greed is beginning to overwhelm my fears. Particularly while the market thinks that the return of Cigar Lake to production by Cameco is a negative, I think it's a positive because Cameco stated publicly that they wouldn't restart Cigar Lake until they had enough of its production sold in long-term term contracts that they could earn a reasonable return on capital employed from the uranium that they sold, which means unless they deliberately misinformed us, which could happen, or that they changed their ideas, that the term uranium market has become firm enough that they have been able to contract substantial volumes of the Cigar Lake uranium into the term market. For those listeners of yours who might not understand the preceding statement, most of the quotes that we see for uranium are the spot market, which is where about 25% of total uranium volumes trade. That is the least opaque market. The term market, the contract market, where the miners sell either through the brokers or directly product to utilities in 5-year terms or 7-year terms, is much more contractual and much more opaque. The word that we're getting, and I can't confirm this, is that while transactions in the spot market are going across the board at about $30 a pound, transactions in the term market are going for as high as $45 a pound. In other words, the utilities are paying more in the current environment so that they secure supply at reasonable prices in the longer term environment. If we are seeing, and I'm not sure that we are, but if we are seeing the strength in the term market that the Cameco restart would imply, you will begin to see that reflected in the spot market too. The second thing that you've seen is at least 2 different junior uranium issuers taking advantage of very strong share prices to raise capital in the market. And rather than deploying that money that they raise in cash, they have actually taken the cash proceeds of the share issuances to buy physical uranium, preferring to store their capital in uranium rather than in cash, which will say something about what the insiders in the industry think is going to happen. So for all these reasons, I am going to begin to redeploy into uranium fairly aggressively in the next month. I suspect that half of my deployments will mirror the deployments of the industry itself, which is to say that I will buy shares in physical uranium on exchanges. This is not the kind of material that you want to store in your basement, but rather that I will buy shares of one of the exchange-traded uranium proxies. I will certainly increase my positions in Kazatomprom and Cameco and CGN mining, assuming that the markets don't really truly run away. And I'll begin to redeploy back in the juniors in the next 4 weeks. It could be, Jake, that as I often am, I'm early and that I am deploying capital before I either need to or should. But the truth is that in the last uranium bull cycle, when uranium took off, that up move took no prisoners. And if we do see the type of tightness that is suggested in the term market as a consequence of the Cameco restart, and if you see that tightness begin to be reflected in the spot market, I really truly am afraid of missing this train, given how well the last train treated me.
So, is this a fair summary that you're saying it seems like there's a lot more happening and we're a lot closer than maybe it even appears. Therefore, you feel like there's a small window.
It's risky because the small stocks are overvalued at today's uranium price. It's just that the apparent tightness in the term market means that this uranium price might move, in which case the uranium stocks would really move. I hate overpaying for stocks, Jake, as you know. And I am, by my own metric, overpaying for these juniors by allocating here. I'm willing to do it because the incredible upside relative to the downside inherent in those 10 or 11 good uranium juniors.
Okay, yeah, fair enough. So you said your greed overwhelms your fears here. I like that. So when you're looking at it then and you see this type of correction, you're saying some people maybe that are a little unfamiliar with the market to maybe say, well, that was a nice ride. Let's move on to something else. But you're saying this is the time to be looking at adding right now if you haven't.
You know, Jake, everybody needs to define themselves as an investor or speculator. There are some people who are traders. There are some people who are attuned enough to the impact of a narrative on a market that they can move from theme to theme to theme. I'm not one of those. I tend to invest or speculate in things that I understand well. And I understand uranium fairly well. I understand it well enough to know that the juniors are overpriced from an empirical point of view at today's uranium price. I'm also experienced enough that I am A, willing to be early, and B, I understand as a consequence of history what happens to these companies when the uranium price does move. Whether or not I'm right as to the timing of the move, we'll know in a year.
Where do you rank uranium right now compared to other opportunities?
For somebody who has my preferences, I rank it very highly. First of all, I can afford to lose money, both psychologically and financially. It wouldn't be the first time in my life. And the amount that I would lose wouldn't change my decision as to what to have for breakfast. And if your listeners look at me, they'll know I eat too much for breakfast anyway. The other thing is that I like speculating in areas where I think the potential gain is disproportionate to the potential loss, which is to say, it wouldn't take much to see a five-fold move to the upside in select uranium juniors. So if I believe that I have a 40% downside and a 500% upside, even if the probability of the downside is greater than the probability of the upside, that's such a lopsided bet in my favor that I'm willing to make it, particularly because I know if I'm willing to hold for the 3 to 5 year time frame, that there's an overwhelming probability that I'm right. Many of your listeners, particularly the younger ones, won't have had either the experience or the patience that I have. And many of the younger readers too will be more generalist investors, that is, inclined to invest in many more sectors than I'm willing to invest in. I'm only willing to invest in sectors where I believe that I have a competitive knowledge advantage over other investors, which means I only invest in natural resources and conventional financial services. I don't invest in things like cannabis or technology because I don't understand them. So for investors that have my sort of mindset and my sort of preferences, I would say, at least in the speculative environment, that I'm more attracted to uranium than any other commodity.
Rick, it sounds like you're telling me we're getting pretty close. If Rick is saying that he's going to override his feelings of the stocks maybe being a little high, and it sounds like you know a lot of people. It seems like we're getting pretty close.
This is based solely on a hunch, Jake, and it's a hunch that is partially informed by my prior experience in uranium, which is to say, nobody cared about it. Then people began to care about it. Then they lost interest, and then the term market led the spot market. This is a movie that I've watched before, and maybe because that movie was so much fun to watch, which is to say, maybe because I made so much money in the sector, that I'm engaging in wishful thinking. But I'm engaged in wishful thinking from a very informed point of view. If, as an example, my junior uranium stock investments, which will probably initially total 20% of my total uranium investment, was to fall by 40%, that certainly wouldn't be the first time in my life that a class of speculations delivered me a 40% loss. I actually think in the 12 to 18 month time frame that that's unlikely. I think there's a lower probability of a loss than a gain. I also think that if the uranium price were to move to what I believe is a market clearing price, which is $55 to $60 a pound, that I would see in that package of uranium juniors a 300 to 500% upside. And I would see in the marginal ones, which I likely won't buy because the risks are much greater, an 800 to 1,000% upside. By the way, I'm willing to forego the 1,000% upside in favor of the 300 to 500% upside because I believe the risk to reward juxtaposition is better in the stocks that have higher quality and thus less far to rise.
So when you're talking about the Cameco restart, you think, well, wow, the stocks are selling off because of it. You're saying you think that might be a misinformed interpretation. Can you touched on it, but can you tell me a little bit more?
Sure. What Cameco guided and what Kazatomprom guided too was that they wouldn't restart the mothballed operations, including the operations that were mothballed as a consequence of COVID, until they could earn a reasonable return on capital employed selling the uranium in the term market. $30 isn't a sufficient price to generate Cameco a reasonable return on capital employed at Cigar Lake. They may be misinforming the market. It may be that because it costs them $8 to $10 million a month to maintain the mine on care and maintenance, that they are accepting a lower standard of financial return. I can't know that, and you can't know that. Because my bias is so overwhelmingly bullish on uranium in the 3 to 5 year time frame, I'm willing to take the 12 to 18 month risk that Cameco is doing what they said they were going to do, that they have managed to take advantage of a firming term market to sign contracts, or they believe that they will be able to sign contracts in the near term, which will allow them to earn a reasonable return on capital employed at Cigar Lake, which would suggest that the firming of the pricing structure that you and I have been talking about in the uranium market for 12 months is in fact beginning to occur. Remember that the term market generates 70 to 75% of sales in the total uranium market, but it's totally opaque. We see the spot market, which is only 25% of total volume. When consumers lose confidence in their ability to meet their fuel needs in in the spot market, they turn to the more expensive term market. It's a form of insurance. And the spot market then gets pulled up by the term market. My bet is that Cigar Lake, the restart of Cigar Lake, is a response to Cameco seeing a firming in the term market.
Okay, so how about hedge funds and uh, Uranium Participation Corp? From what I read, that in order for, I forget if it was UEC or Denison, it took them quite a few different places to find the amount that they were set to buy from their raisings. And then shortly thereafter, within the next week or so, Cameco announced the restart, which was like, oh, that's interesting. Now, Uranium Participation Corp has said they were going to come in. Last time hedge funds came in, I'm wondering in my head, why isn't there a rush to clear out whatever's less? This seems like such an incredible opportunity for someone to do something like that.
I think that the hedge funds, for the most part, are participating in interest rate arbitrage. In other words, there are easier places for them to go, borrowing very, very, very short term from the very largest investment banks and taking a time and credit spread. The idea that you could borrow money if you were a hedge fund at 100 basis points and relend it at 350 basis points, taking a 250 basis point spread with extraordinary leverage. While I'm not advocating that your listeners do this, it's extremely seductive to a money manager that doesn't have his own money at risk and has raised $1 billion from strangers. Getting a performance fee where 65% of your revenue comes from a credit spread is, for them, extremely attractive. Much more attractive probably than investing in uranium and having all of your investors exit your fund. Uranium Participation Corp, I suspect, now that it's trading back closer to par, will be looking to raise money and deploy it in the uranium space. I'm not well enough informed personally to know whether or not how tight the spot market is in uranium. I noticed that both Denison and Uranium Energy report that they have been able to allocate the capital that they raised in their recent raisings to, in fact, buy physical uranium. So I suggest, at least with the fairly small amount that they purchased, my suspicion is that that's 4.5 million pounds, that they were able to obtain reasonably secure supplies. Understand, too, Jake, that the broader acceptance of uranium is beginning to occur, which is to say, as an example, even President Biden has suggested that uranium or nuclear power is an option that the United States needs to look at in terms of meeting their climate obligations. Bill Gates, not necessarily a friend of mining, has said that uranium is, in fact, the answer. It would seem that in terms of public acceptance, that the winds are shifting in the direction rather than away from uranium. If that happens in a popular sense in Japan, given that the government is pro-nuclear and Japan Inc., which is to say the largest industrial companies in Japan, are extraordinarily pro-nuclear, if the citizenry, if the voters in Japan began to accept or re-accept nuclear, and we began to see a restart of the Japanese nuclear fleet, a theme that you and I have talked about in the past, I think that you would see an immediate and dramatic impact on the uranium market. I'm not saying this is going to occur, but my position for 4 years has been that the near-term price in uranium will be dictated by the pace of Japanese restarts. And if popular global opinion worldwide translates to increasing appeal for nuclear power in Japan, then we are truly off to the races. I'm not saying this is going to happen. I'm just saying that the narrative is beginning to be popular rather than unpopular.
Yeah, it seems almost like every day you see a new article by somebody, and it seems like pretty much in America where it's I wouldn't call it the most cozy political climate. It seems about the only thing anybody seems to agree on the Democrat and Republican side, and this could have huge bullish implications.
I think it could have huge bullish implications. The other thing that amuses me, Jake, is I have been fairly recently, as a consequence of Sprott's involvement in the silver market, in touch with several thousand young investors or speculators, depending on how you'd like to call them, that have become newly acquainted with the silver narrative. And as I have debriefed these young people, many of whom are acquiring a really surprising degree of sophistication fairly early on, uh, the willingness that they have to adapt to technology and the willingness or the eagerness really to absorb a narrative tells me that once momentum gets on the side of uranium and the junior uranium equities, that whole sort of Reddit crowd, the people that were involved in GameStop, the people who were involved in the silvers market. I mean, if you want a narrative where there is unbelievable upside momentum and a tight market, uranium probably has 10 times the appeal that silver does. It doesn't have the big short attention associated with it. But if you look at the float relative to the store in uranium, there's no float. And a move, I don't think that young speculators will get involved in the uranium story until the price action begins to justify the narrative. But when the price action begins to justify the narrative, the fact that the narrative is so powerful, and the fact that this younger generation is so oriented towards technology and away from carbon, tells me that there is a chance that you would see a movement en masse among these young speculators into what is probably the tightest narrative that they have experienced in their life thus far.
Well, if that doesn't get you excited, I don't know what will. I have to say, Rick,
Remember, that's an if, Jake.
it's not an if,
if,
Rick.
okay.
It's not an if, Rick. It's certainty in my book. My book doesn't count that much, but I think that we're going to beat you from last time.
I'm sorry, I didn't
said I think we're going to beat you from last time, from 2007. That's what I think is going to happen, especially when you consider the amount of liquidity. Everyone's searching for yields and the necessity of this. You know, every day it seems like these governments are making new carbon predictions. How are they going to do it? And so I think we're gonna beat last time. How about you?
I don't think that the uranium price will beat to the upside because there's so much productive capacity available in Kazakhstan.
I think the equities could still beat it, though. What do you think? Is that possible?
I think they could. Simply, could is a sort of a wuss word. I think they could because the starting place now has 10 or 11 uranium juniors that are decent deals. And there was much less capacity in the industry in terms of quality in the last go round. If you look at some of the juniors, they're actually fairly high quality speculations now, and they were all on life support at the beginning of the last bull market. In other words, they had to raise survival finance. These guys have all raised the survival finance now, which is an interesting set of circumstances.
It's exciting stuff. So you heard it here. Rick Rule says he's going to be deploying new capital in uranium market over the next 4 weeks or so. Correct. You know, Rick's always tempered in the things that he says. He's a well-known professional, never likes to, overstate something. But I think that was a pretty exciting stance there. Get involved back in the next 4 weeks. And you said that right now your greed is overwhelming your fear. And I think it's a great place for us smaller guys to hear from a big investor such as yourself. So I want to thank you for taking the time to give us a uranium market update. I think it's going to be very reassuring. People are going to be excited to hear that you're looking to get back involved over the next 4 weeks.
All true. Thank you.
So for everyone listening, make sure you hit the like button on this side right over there and this side right over there. We're going to move to part 2 of this interview.
Jake, may I also say that I, as always, welcome your viewers submitting their natural resource portfolios, including their uranium portfolios, to me for rankings. There's
right there down below.
There's a new web address, rankings@ruleinvestmentmedia.com. Rankings@ruleinvestmentmedia.com. And I will rank natural resource portfolios, including uranium portfolios, on a 1 to 10 basis, and comment on individual issues where I think those issues are worth commenting on.
And if you missed the website spelling, we'll have the link in the description right there down below. So you can just go ahead and you can just click that right there down below. Give us your comments down below. This is Rick Rules, and let us know if we're going to beat Rick's equity performance during the 2007 market.